Hello world, hello Australia, it's Jamie Burke here, the Cryptokoala. I'm very excited to have Maddie Greenspan with us today. Maddie is the founder at Quantum Economics. Maddie was a senior market analyst at LBRY. Now he's frequently quoted on financial media such as Bloomberg, Forbes, the Wall Street Journal, Reuters, CNBC, Yahoo Finance, and the Times Money magazine. So it's great to have you on the day, Maddie.
Thanks for having me.
So, Maddie, what's going on with global stocks at the moment? You know, they've been dropping over the last few days.
Yeah, it's quite a shitstorm. There's a lot of panic in the markets. Yes, a little bit has to do with the coronavirus, no doubt, which is the catalyst. But we've been talking about a very overpriced market for quite a while. So seeing it come down 10% is not surprising, but it's the speed, I think, at which things are, value is flying off the table that's getting everybody in a tizzy at the moment.
Yeah, definitely. It's the speed as well. It's just crazy how much it's dropped. Something like the gains have been wiped over the last year. Have just been crazy, just huge wipes.
Yeah, that's basically what happens is value all across the board. It comes to be reduced. So if you think about the economy as something that expands over time, and then all of a sudden it's contracting very quickly. And basically that means that, something that was worth, I don't know, $20 yesterday could be worth 15 today.
It's crazy. I was looking at the charts the other day and I just saw this big red drop. And it's funny because someone on Twitter said, which altcoin is this? And I said, no, that's the S&P.
No, that's the stock market.
That's the S&P 500, So
no.
Yeah, so we know the coronavirus is a major impact, and there's a lot of the psychological aspect involved with that as well. You think fear drives the markets, and there's a lot of people scared. But it seems like, Donald Trump, he seems very calm about it, and the World Health Organization doesn't seem to want to declare it as a pandemic. So
right.
it seems like, maybe they're trying to keep it a bit cool. But what's your thoughts on that, Maddie?
So at the moment, I really see no reason to panic, as it were. And that's both speaking as an investor and as a human on this planet. If you just look at the numbers, I mean, we have under 3,000 people, fatalities in China. And overall, if you combine together, it's less than 11,000 people who are in critical condition, meaning most of the 80,000 people who contracted the virus actually had a very mild version of it. So it's only a very small percentage of the population. I worked it out in Friday's newsletter. I published the actual number was 0.0008% of the Chinese population. If you consider that the flu, right, claims between 250,000 lives per year across the world, we're not at those levels. It's not. We're not talking. We're talking about something that should be quite common. Obviously, there's there's a few reasons why it's different than the flu, which is, first of all, the fact that it can be transmitted without symptoms, meaning that people have the incubation period of up to 2 weeks without showing any symptoms whatsoever, is very scary because, usually when people have the flu, they stay at home, they don't go out, right? And here you have a situation where people are flying across the world and they're actually carrying the virus. So this is a bit scary, and this is also increases the virality effect. Whereas a flu could catch, each person who gets infected could catch, another person or maybe two. In this case, each person who's infected can catch another 2 or 3 people. So so it spreads a lot quicker. And that's what we saw in Wuhan as well, where all of a sudden there was so many people who had it at once that the hospital beds, you run out of room in the hospital. You're not set up to treat that many people all at once, and that can be a problem. But other than that, I don't really see much of a reason to panic, as it were, just because of this. I mean, it does go away when flu season ends, and by next year, it'll be very likely incorporated into the regular flu shots that we take.
Yeah, I think over here in Australia, they're working on a vaccine at the moment, the CSIRO, and they're currently trialing a vaccine for human trials, I believe, or they're doing trials at the moment. So I know they're working very hard to develop a vaccine. And
everybody's on it.
I think everyone is, most probably, yeah. But yeah, I guess it's like every single year, there's always something that, this can kill you or that can kill you. It wasn't too long until we had that SARS as well, and there was a big thing around that, and people was going around wearing masks. So it does potentially seem to be over-centralized, bit maybe blown out of proportions. But what I want to really look at, Maddie, is, and I've been watching, and I guess you have as well, looking at your newsletters, is US stocks and equities, global stocks, and then crypto, Bitcoin. Are they correlated? Do you think that they're correlated? Because, I see it dropping down, and I see some little rebounds in crypto, and I'm just, when is it going to start hedging,
Yeah. So the overall data would suggest, and when we look at big picture data, that it is quite uncorrelated. However, we have seen in the past few weeks and months a very clear indication that that's changing. The best example is in the January 3rd U.S. airstrike in Iraq that killed the Iranian general, and in this case we saw oil move up 5%, and then within an hour later, Bitcoin had moved up 5% as well. So this was, I think, one of the first real examples that we've ever seen where Bitcoin was giving a strong reaction to a geopolitical event. Now, over time, I mean, as we spoke about the big picture data, what we're looking at is maybe a 10% correlation, right? Maybe 15% correlation between Bitcoin and gold, or Bitcoin in the stock markets, which for all intents and purposes, it's nothing really. I mean, it might as well be zero at those levels. But then again, right, we had, you can't shake the feeling that, throughout January, Bitcoin, was rallying along with the stock markets, and they were moving in lockstep. And then the stock market started tanking, and Bitcoin really, you can't explain it any other way, that Bitcoin was following the stock markets down lower, even though it was a bit more resilient. I mean, overall, 13% dip in the S&P 500, 13% dip in Bitcoin. Now, obviously, 13% in Bitcoin, the hodlers are going, what's that? They don't even notice.
It's
right?
nothing.
Whereas,
It's not
on Wall Street, they're like,
yeah,
13%.
It does. It's big news, isn't it? When stocks got dropped that much, but for crypto, that's just another day. It's just another order of a duck's back,
Exactly. For Jeff Bezos, a 10% move, and we're talking about billions of dollars. Warren Buffett, any of those people, they're going to be missing that money. But the timing, I mean, and you can see it there, right? And this really goes back into how I viewed the markets for years, which is that on a day-to-day basis, we don't see a direct correlation. If we calculate every single day, the last 180 days, and say, did the stocks go up? Did Bitcoin go up? If the answer to both of those questions is yes, by how much, then you see really a correlation on a day-to-day basis, right? Which there really isn't much. But if we look at the macro picture and we zoom out on the chart and we say, okay, 2017, right? That was an amazing year for stocks and an amazing year for crypto. 2018 was extremely volatile, both for stocks and for crypto, right? 2019 was an exceptional year, both for stocks and for crypto, right? So we can see that on a year-to-year basis, there is quite some correlation there.
So we've got all this going on at the moment, but we have the halving coming up in 2 months' time. So the Bitcoin halving, where the mining reward gets halved. So potentially, you know, what are your thoughts just leading up to it over the next 2 months, and especially afterwards, because you know it does show in the past there's been a bit of a trend, you know. So what are your thoughts on that, Matty?
It's very difficult to determine. First of all, you know, past performance is never an indication of future results, right? We got to get that disclaimer out of the way.
Definitely, yes.
As I've got the SciSec license, they require me anytime that I show a chart to actually to use that disclaimer. But here in this case, even more so, because out of the two previous halvings that have come in Bitcoin, both of them were at a time when the market was a lot less developed, right? In 2017, you know, that was really when the market started for Bitcoin. You know, when we started seeing $1 billion a day in volumes, right? So both of the halvings for Bitcoin were before that. So we've never had a real halving event within a developed market.
Yeah.
We've never had a halving event when Bitcoin was between, you know, $9,000 and $10,000 a coin. Never happened. We've never had a halving event when the hash rate was so incredibly high. I mean, think about it, from 2017 until today, the hash rate is probably 6 or 7 times what it was then, right? So we don't really know how the miners are going to react. We don't really know how the network is going to react. What we can say, and I think that a lot of the gains so far last year and this year have been attributed to the halving event, because if we think about what gives Bitcoin its value, the meat and bones of it is the concept of digital scarcity, right? That you have a strictly limited supply of Bitcoin. And the halving event is a great reminder of that, right? It basically reminds us and says, okay, everybody on this day at this block, all of a sudden, whatever was coming in, we're going to get half of it.
Yeah.
We were getting 3.68% annually new Bitcoins minted. Now we're going down to 1.8%, right? And I think that that's basically it's just a big, and if you look at, you know, what articles have been saying about Bitcoin and why it's rising, I think that the halving event is going to be the #1 thing that's been mentioned.
Oh, definitely. And I mean, I guess in a way, you've got that built-in mechanism, different to gold. That's what makes it so unique. It's sort of built-in inflation, but controlled in a way. And it's going to be interesting.
Built-in deflation, sure.
Yes, it's built-in deflation. But it's going to be interesting now, you know, with the hash rate so high post-halving, because, you know, we're seeing big industrial scale rigs, you know, that are far more powerful now. There's a lot more infrastructure in place. And also you've got a lot more people, a lot more savvier in the markets. So yeah, it's definitely going to be interesting what it's going to be like post-halving.
Mm-hmm. Yeah, it's going to be fun to watch no matter what, right? The hodlers are going to hodl anyways, right? The speculators are going to speculate. So, you know, we'll see how it goes. For myself, I've been bullish on Bitcoin since late 2016. So
where would you say Bitcoin is currently in terms of adoption there, Manny? You know, would you say we're early adopters?
I think the early adopters era was between, you know, 2012 and 2017, maybe. I think from 2018 on, I think we've already reached really all of the low-hanging fruit of the market, meaning that anybody who has a natural propensity to use Bitcoin, anybody who, let's say, they need it as far as a store of value, anybody in Venezuela or in Turkey, right? I think that those people already know how to use it and already are using it. I think that there's a lot, you know, now that all the low-hanging fruit knows how to use it. I don't think we can say now anybody who comes in at this stage is an early adopter. But we're still very early on in the game, I would say, as far as overall usage. We still haven't seen any kind of central banks making announcements that they're accumulating Bitcoin or anything like that. So still, I wouldn't say early adopters, but I think that we're just before the tipping point.
Yeah, definitely. You've not had the likes of the IMF come out, or you know, you hear like possibly Russia in their reserve banks. You know, you've had that in the past as a replacement for gold, or alongside gold instead of the USD. So I could maybe potentially see that, you know, in the future as an alternative to what the US dollar.
Mm-hmm. You're asking if Bitcoin could be an alternative to the dollar?
Yeah, I'll put that to you, Manny. Do you reckon that, you know, as a long-term sort of prospect, if it could be a replace the US dollar as a reserve currency?
So I think that over time, and obviously you can't really tell the future with these type of things. There might be any number of events that can come and change this. But as far as I see the way things are going, the US dollar's dominance is going to have to decline. Right now, just about all world trade is done in USD. And I don't think that that is a sustainable path. Now, first of all, we have China and Europe, right, who are, and many other countries, about 50 different central banks around the world, who are in the middle of developing their own central bank digital currencies. And the United States is very far behind in that game, where even until today, they're still debating whether or not they need to digitize the US dollar, whereas just about every other central bank in the world, every other major one is really researching it, and they want to do it. They want to make native digital currencies. So as far as this is concerned, I think that the US dollar's dominance is going to decline. Will it be replaced by Bitcoin? I don't think directly, but I think that over the next 5 or 10 years, there will be a war as far as reserve currency dominance is concerned. And I think that there'll be a lot of gainers, including the renminbi and including the euro, or whatever they come up with. Maybe the European Union can make, you know, some kind of a partnership with the Bank of England. I don't know, maybe the Reserve Bank of Australia, who knows? And Bitcoin will very likely gain as well as a result.
It just seems like at the moment, you know, primarily you've got the euro and you've got the US dollar, and even with China at the moment, it'd be good if having that as a reserve currency, and maybe Bitcoin as a fourth, just to bring more stability to you know, to the global economy.
Yep.
Something I want to sort of touch on now is that going back last September, we saw BACT delivering Bitcoin futures, and slowly but surely since then the volume has been increasing, not consistently, but it has been a steady growth in volume. So what does that volume tell us? What does that tell us with that over time, Maddie?
So the volumes on BACT, I think, are still pretty small. I mean, the open interest is still in the single digits as far as millions are concerned. Maybe they get to 10 million every once in a while. I'm not really paying attention too closely, but I think that overall the volumes are still pretty insignificant when you compare it to the amount of money that's exchanged over the blockchain and over the over the exchanges, right? The exchanges really are the large players as far as global volumes are concerned. But the fact that it's growing does tell us that there's an increasing level of interest from institutional players. And even by now, you know, you'll watch CNBC and you'll watch Bloomberg, and you'll see analysts and talk show hosts talking quite regularly about Bitcoin. Whereas, 2017, it was like, you know, it was almost it was the B word, right? If you do utter it, it's with extreme caution, right, and many disclaimers. And now it's like Yeah, and did you see what happened? This how this affected Bitcoin, right? And then it's just very, very natural for them to talk about it like this.
Definitely.
And I think that's true for the entire world, right? So it's both a greater level of understanding and awareness from the institutional side, but I think that there's a greater level of understanding and awareness from everybody's side, where everybody now understands that this is kind of that Bitcoin is a thing and it's not going away anytime soon, and it's not necessarily linked to nefarious activity or
Yeah.
something like this.
It
So I
just
think
seems.
that's
Sorry.
there's a lot of progression on the ground. Sure.
Yeah, definitely. It seems like the whole world is getting a bit more relaxed to it, especially the US. Oh, heaps more to go, especially on the regulation side. But it seems a lot more. It's come a long way.
Sure.
I just want to talk a little bit more about institutional FOMO. So, what
Yeah.
vehicles and tools would be required for institutions to be able to get exposure to Bitcoin, and what barriers are currently in place?
I think that any investor these days who really has a desire to be involved in Bitcoin can do it, right? I think that the traditional channels are opening up very quickly. I think that there's only one channel right now, which is the ETF, which is yet to be approved. But any investor really who's an institutional investor can either get exposure through the CME group or through Backed, or even just to open up an account with Gemini, right, which is a fully regulated, exchange that's caters specifically to Wall Street institutions. So they've got no issues there. So any fund manager who really wants to can have that exposure to Bitcoin. And I think that we've seen some kind of push very recently from the Trump administration via the Treasury Secretary, Steve Mnuchin, who's been saying that he's kind of been warning us that tighter regulations are coming to the crypto world. And we know that also in June, the FATF, Financial Assets Task Force, is going to also bring their new regulations, which is basically going to treat every cryptocurrency exchange as if it's a fully regulated financial institution, meaning KYC on every customer and really opening up their books to the anti-money laundering authorities, which really is a game changer for crypto. So I'm not really sure what Mnuchin and Trump are cooking up over there, and I don't really know. I couldn't really say how it's going to affect the crypto market overall. It's not going to affect Bitcoin, right? Because Bitcoin will continue humdrumming one block approximately every 10 minutes, and people who want to transact in Bitcoin can still do that through their
Definitely.
computer, so they really can't stop that. But they could obviously hamper the flows from fiat to crypto and crypto to fiat if they want to. So we'll see how that goes. As far as I see, it's going to affect the U.S. More than it affects crypto. See, they're scared right now, right? They know pretty much what we've been talking about as far as the U.S. dollar's dominance is concerned, and they know that it is threatened. But I think that they're going the wrong way as far as trying to limit crypto within their borders, rather than actually innovating. Because the biggest thing that the US could do right now, or any government, if they want to thwart crypto, is actually to compete with it, to make it easier for people to transact in their currency in a free and fair environment, to lower transaction costs, and to stop intentionally debasing their currency, which is a huge problem that central banks have been involved in since the financial crisis. They're just printing more and more money in order to intentionally, devalue all money. Whereas, as we mentioned before, Bitcoin is a deflationary asset. So if they want to really compete with it, I think that that would be their best strategy. But if their plan is just to lock it out of the country, I think that they're going to find their attempts quite futile, because people will still be able to use it, and there will only be more incentive for people to use it the harder they try and lock down the financial system.
Yeah, definitely. They're trying to slow it down. It seems like, especially with Binance, the US, and on ramps, they can hinder it and slow it down, but they're going to get left behind, and especially with China, with what they're doing with the RB. Even though it seems to be more of a permissioned blockchain, there's still common leaps and bounds in the US. So I want to go back earlier on, just reminded me, and something that I noticed on LinkedIn, what you mentioned on one of the comments of the coronavirus, and it's something I want to bring up because I think it's something that's really overlooked, and it's a really interesting point, where you mentioned about the manufacturing aspect of China.
Yeah.
And I just want to get a bit more insight, because I think, that aspect, it's not really thought about, Maddie.
Right. So, and this is something that I wrote about extensively in the newsletter. Extensively. One day I came out with this hypothesis that, and I mean, I'm just kind of, it's experimental thinking, really, because it's not something that is going to for sure play out, or how it's going to play out, we don't know. But according to my understanding, the entire country of China was on kind of a self-imposed lockdown from Chinese New Year through till now almost. And as far as I understand, and I have a friend who I'm speaking with over there who's on an encrypted messenger with me, obviously to avoid oversight from the Chinese government.
The VPNs.
Yeah, so he's got a VPN, and basically he tells me that now things are kind of getting back on track, whereas for the whole country was off for about a month. Now my hypothesis was simply that everything is made in China these days. Everything that you buy on Amazon, everything that you would buy in a Walmart, from toothbrushes to I don't know, silverware, or anything that you can think of, right? That you would buy in a store, except for food itself, is made in China. So obviously, with the entire country being offline, there was a fear that there would be some sort of a massive supply shock, meaning that all of a sudden Walmart couldn't line their shelves anymore, and Amazon would not be able to get to get products out of their warehouses or into their warehouses and out. And I felt that personally when my wife was ordering a pair of shoes for my daughter from China. She ordered it from 3 different sites, and all 3 different sites said, "We can't get it for you right now." They didn't give any reason, but we're pretty sure that this is because of the virus and the fact that there's no nothing's coming in or out of the country. Now the problem that what would a retailer do, right? Like Walmart, for example, if they couldn't line their shelves anymore, the natural instinct would be to start raising prices, right? And let's say you go into the supermarket, and toothbrushes are they're 3 for $1, right, today, right? And then you go in the next week, and then all of a sudden those same 3 toothbrushes are $5, right? And then $10 and $20. That could lead to a very quick inflation. And the problem here, and that if it was only if it's only a short-lived supply shock, I think that things can normalize pretty quickly. But I would say that even if China had stayed offline for another 2 or 3 months, especially with all of the currency debasement that we've been seeing, right? I mean, they've been printing nonstop for 10 years. I mean, the central bankers have been like, they got their head down and just keep printing, and all of a sudden, every few years they look up. Where's the inflation?
Just like the Fed,
No
yeah.
inflation. Okay, yeah, well, let's keep printing.
Definitely.
Where's the inflation? No inflation. Okay, like print. And that's what they've been doing for the past decade. So this is a like kind of a tinderbox as far as I see, that even a short-term supply shock would have the potential of sparking hyperinflation. Now, as it seems to me, sitting here today, and as of Friday, I would say, when my friend told me, okay, yeah, people are getting back to work now, and now that we see vaccinations being trialed, and the peak panic seems to have subsided already. I think that this is a much less likely scenario. Thank God, really. But it's just something that at the time was certainly a worry worth.
Definitely. And it's definitely, yeah, something going back a week or so ago when I actually saw it. It's I could start noticing it here in Australia as well. Just some of the things, like, my wife wanted a netball uniform and they couldn't get it delivered, and it got postponed for another couple of months. And it's all linked because the uniforms come from China. So it's sort of, you start to feel it here, but hopefully, we're not going to go there.
Yeah, so for now, it seems that it's really kind of the specialty items that are lagging. But, obviously, if the country would have remained on lockdown for another month or two, I think that would have been a problem. So for now, as far as I can see, we're in the clear, but I will definitely update if I see anything else along that nature.
Yeah, definitely. So, guys, if you want to follow Matty, he's got a great newsletter. I subscribe to his newsletter, and I like to keep an eye on it, and watch what Matty brings out, and also his tweets as well. I love your tweets, Matty. Got some real interesting tweets.
Thank you.
And and I guess put it out there. We did sort of stay in the middle. I'm not a financial advisor. Do your own research, guys, of course, and make sure your own due diligence. So, Matt, it's been an absolute pleasure having you on, mate. I look forward to seeing you when you're on CNBC next.
For sure. Will do.
Yeah. All right, mate. You have a wonderful weekend. I'll catch you later, hey?
You too. Great talking to you. We'll see you.
See you, mate. Bye.
Bye-bye.